when the bull run stops, you're going to find out who's going to lose, who's losing their money, and who truly isn't a good investor. Because when times are good, you're not learning anything. Everybody's making money. But when times are tough, that truly shows you who has the skills.
Refi or HELOC?
Refi or HELOC, I would do both. Cash out refi to the right LTV, and it depends on an individual. So when I'm doing a review, I'll see maybe sometimes it's 70%, sometimes it's 80% LTV. And then from there, we would get a home equity line of credit for that property, if it's a primary residence, to get the rest of the money. So it would be 100% loan to value on the property. And normally if it's done properly, your mortgage, taxes, and insurance is the same amount that you would be paying rent. Now you still own the home, so you get all the appreciation as the property goes up, but you're paying money like it's rent. So you're renting to yourself. And then you're using all that excess cash to invest and get a good return on your investment. If it's done properly, it can be very profitable. Because if you're a sub 3 on your first mortgage and then you're sub 6 on your second HELOC, then you're gonna do really well.
Follow-up question with that is, can you explain why it's better to renovate a multi-family all at once?
So it depends what you're fixing. If you're fixing the sewer system, obviously everyone's gonna be affected. You're gonna have to demo the floor. So it's a good idea to do it all at once. I'll give you an example. I have a 7-unit property. It's a duplex, triplex, and duplex. So on this duplex, I'm doing the whole building at the same time. I'm not doing all 7 units at the same time, all 3 buildings. I'm just doing that one building. All the plumbing, all the electrical, all the AC, new framing, insulation, drywall, kitchens, bathrooms, roof, windows, doors. Now everything is done on this property. I took it from a 1950s build. It's gonna be a 2021, basically fully remodeled. I won't have to worry about any problems for 15 years. Again, if you're doing sewers, you're not gonna be able to get around from busting up the floor. And if you don't wanna, have trouble your tenants, if you can do certain upgrades that will not affect your tenant, then you can do 1 unit at a time or 1 section at a time. It really depends on the specifics of what you're trying to do. If it's just AC units, yeah, you could just do 1 at a time.
We have a question here on YouTube, and they ask, do you recommend buying rental property at this really hot real estate market?
So this is the crazy part, right? In 2019, I was being very careful on what I'm buying. And I was hesitant on what's to come. Now we're in 2021. I'm still careful on what I'm buying and making sure the numbers work, but I'm not as conservative, because when they printed trillions of dollars, the money has to go somewhere. And it's gonna eventually go to hard assets. And one being housing. You can't get around living somewhere. You got 2 options, live somewhere or live on the street. You're gonna live somewhere. The fact is, right now, with what happened in this printing and the low interest rates, and I don't see interest rates going back to 5, 6, 7%. I think they're gonna have to stay sub 4s, which means the pricing for housing is gonna stay high. The only reason the housing market's gonna crash is if we have a financial crisis that affects the banking sector where you cannot get loans. Only reason 2008 happened the way it did. It's not because there's a bunch of homes that went to market. It's because a bunch of homes went to market and people couldn't get loans. So right now, all of the indicators does not point on housing prices going down. Even if we have a flood of homes coming because of foreclosures, that would not make it go down. That would reduce the amount of increase that we're having. And if we did go down in 2 years, because it's gonna take at least 2 years for those homes to hit the market, all you're doing is bringing back it to the price of what it is today. So in 2023, we have a flood of homes, though the price of homes is gonna drop down to 2021 prices. So if you can get a property now in a great location, likely that property is not going to be available in 2023. So when I'm buying diamond properties, diamond locations, I'm buying that location. I'm buying that. And if the market crashes, usually that seller isn't going to sell the property for 10, 20, 30 years. So that's where it doesn't matter so much, because I'm buying a great property that has a great 10, 15 year outlook. That's what I'm looking at. So to finalize, what I'm trying to say is run your numbers, because I'm buying properties right now that are good deals. Based off of what the rent is, if I remodel it and based off of the remodeled rent, I'm making a great spread. I'm burring apartment complexes.
Follow-up question is, do you recommend buying in the same state as you live in, or is it okay to buy in a different state?
So it depends where you live. If you are not in a state that is landlord friendly, that has upside potential, then no. And even if you lived, say, in Florida, Texas, or Arizona, which I'm very bullish on those 3 states, there's certain parts of that state that I would say don't buy in those parts. Because just because the state is good doesn't mean the area you bought in, that city is good. Just because that city is good doesn't mean the area you bought in is good. Don't feel like I can buy any property and win. It's like saying I could buy any cryptocurrency and I'm going to do fine. Maybe during a bull run, everything will go up. But as Warren Buffett says, when the tide rolls out, you'll find out who's naked. Basically, when the bull run stops, you're going to find out who's going to lose, who's losing their money, and who truly isn't a good investor. Because when times are good, you're not learning anything. Everybody's making money. But when times are tough, that truly shows you who has the skills, who has the business acumen that can really make it and survive. Because that's truly where you make a lot of your money. And that's why everyone is waiting for the market to crash, because they're hoping that they can buy it cheap, and that's where a lot of the money is made. But again, right now, without a banking crisis that affects mortgages, I don't see the prices dropping like that. I see prices going up aggressively over the next 10 years.
And which area in Florida won't you buy in?
There are certain like lower income areas that do not have a lot of upside potential, or have very little upside potential. So because of how depressed the market is, it's hard for me to change a whole city, right? You can go, I thought I can create when I was younger, I thought I can create the wave and run with a smaller wave if there is any wave at all. But what I realized is it's really hard to create that wave of change in an area. So now I go in an area that either has an extremely large amount of benefits of change coming, or I go with a current wave and I help work with the wave of change. So if there's a lot of other investors doing significant value adds and bumping them up, and there's people bringing restaurants and tourist events and activities for families, then I'm going to that area and I'm helping it continue. Some area that's partially gentrified and continue gentrification. So for example, in St. Pete, I'm investing in St. Pete, right where I mentioned Kathy Woods just has brought her business right by where a lot of my buildings are. But there's certain areas I won't buy in St. Pete. It's not like St. Pete's a winner and done. No, there's certain parts of St. Pete I won't buy in because, one, the price is too high, the rents are low compared to the price and the headache that's accounted for, and the change, the appreciation is not going to come for a long time in that section. So I phase in to where if I think an area is growing, there's a phase in and a phase out period.
Does Seminole Heights in Tampa area, is that a good place to buy now?
Seminole Heights in Tampa is a hot area to buy now. So where you are on that street in that neighborhood depends on what the dollar per square foot will justify for that property, the price, the type of property, if you can Airbnb, and so there's all these factors that determine the price, and then what is it worth pre-reno, post-reno. So even though it's hot, you could overpay. or you could get a good deal. It depends on the street, what you can do with it, the condition, so a lot of factors. But if you're asking me, is it hot? Yeah, it's hot.